listing without issuing new shares or raising new capital through an initial public offer. Because today's topic is direct listing on GIFT City, so I'm not covering the other part of the GIFT City because GIFT City is offering multiple things, but today's focus is direct listing. So in direct listing allows existing shareholders, particularly initial investor, to sell their shares directly to the public. It is a popular method of tech and startup companies for going public by direct listing instead of traditional IPO route. In this webinar, we will understand the direct listing process of GIFT City, along with the exchange advantage and opportunity it's offer. The key discussion point in the webinar will be direct listing at GIFT City and its advantage, a regulatory framework for direct listing at GIFT City, process for direct listing at GIFT City, and preparing for direct listing at GIFT City, and post-listing, what are the things. So firstly, I want to extend a very hearty welcome to our chief guest, Mr. Pradeep Ramakrishnan, Executive Director at IFSC GIFT City. He looks into Department of Capital Market and Department of Metals and Commodities. Pradeep is not a unknown face for our webinar also. He has attended so many, he has spoken so many times in our webinar. And Pradeep is very dear friend and a very learned person. He has 5 years of experience in private sector, 22 years experience in regulator. He is specialized in regulatory framework for ESG, corporate governance, listing related issue, and fixed income market. And before GIFT City, he was in SEBI for more than 22 years in working in various divisions, especially division of issue and listing. So he is the right person for doing this because he has the experience of SEBI and now he has to implement in GIFT City. So whenever you will ask what is the difference, he can understand, he can tell, and he can make the law accordingly. And Pradeep is one of the finest officer of SEBI, which I should say, and very intelligent and very down to earth. And the interesting is very interactive and ready to listen from the corporate side and the professional side. I welcome Pradeep for this program. Now, I extend a very hearty welcome to other learned speaker. First, Mr. Arjun Prashant. He is General Manager of GIFT City. He is in charge of Division of Dealing in Primary Market of IFSC. During the last 4 years with GIFT City, he has been involved in policy making in several areas in capital market, including listing regulation and capital market intermediaries regulation. Prior to joining this, he has experience over 12 years in capital market with SEBI and has handled various portfolio, including investigation, international affair, takeover, buyback, and delisting. And Arjun, I hope that after Pradeep joins, your entire headache should be, you're worried when starting up so many new things has vanished. Okay, so welcome.
Thank you.
Then we have Mr. Ashok Kumar Singh. He's a Chief Regulatory Officer at India International Exchange. He has been working with the regulatory team of BSE Limited since 2007 and has extensive experience on listing related compliance in last 17 years in BSE, covering the entire gamut of IPO, further listing, QIP, scheme of arrangement, debt listing, delisting, LODR compliances. And he has worked closely with securities market regulator SEBI for the compliance and drafting of new SEBI LODR in 2015 and several other pieces of legislation, to name of the few: LODR, RET, InvIT, and NCRPS. He also closely worked with SEBI in various committees. I welcome Ashok. I know that Ashok is traveling and he is in the train. Even then, he has readily agreed to participate. So wherever questions will come, we will ask him. So welcome Ashok for this program. Then we have Mr. Shubham Goel, is a Assistant General Manager of IFSCA. Shubham is a multinational companies, including his work in Big Four. He excelled in the area of data analysis, audit, and taxation. And he was selected for the Indian Cost Accountant Services. Mr. Goel has worked in the Department of Economic Affairs, Ministry of Finance as Assistant Director in February 2017 He has tenure of more than 3 years with the DEA. He worked on various policy initiatives of Government of India related to infrastructure sector, including viability gap funding scheme. So I welcome Shivam Golem for this program, and hope your experience of government will definitely help. And I saw your article in the Charter Secretary. It has come out very well and very nicely explained the concept with the difference. So thank you very much for joining. Then we have,
Thank you, sir.
then we have Mr. Akash, is the assistant manager at IFSCA. He is a part of the team involved in the policy making in the several areas, including direct listing, regulatory framework for enabling RIT and InvIT and GIFT City. He is also handling the work relating to policy and registration of capital market intermediaries, including credit rating agencies. So he's the person whenever anybody wants to start business and any intermediaries want to join, you have to interact with Akash. So welcome Akash for this program. And then we have Anjali Agrawal, partner head, capital market service corporate professional. So friends, the program structure will be like this, that first I will request Pradeep to give his chief guest address, because he is aware that what is planned, how things will take shape, and things will move on. And then I will request Arjun to explain about the concept. Arjun, Shivam Goel, and the Akash, they will discuss about the entire concept of this direct listing. And then I will request, then we will have a question answer. First, I will ask macro level questions. Then Anjali will ask a specific question, because Anjali has studied as a corporate and as a professional, and she wants to know that what will happen. Like take example, she was just asking what will be happen, the takeover law and the insider trading law, how it will handle. So these are some questions will definitely you have answer for all, but these are the things. And after that, we will have a question answer of public, and we will try to finish all the questions which the public has asked. Before doing this, I just want to give an overview of the GIFT City from our end. It's a strategic importance because GIFT City is a multi-service economic, special economic zone. First, we have heard the SEZ, and this concept has come to India. The people realize that SEZ, like in Noida SEZ. So Noida SEZ is that within the India, you have a outside India's jurisdiction, and various laws, various things are applicable differently. So this is first. Then there's a global integration is also possible, because you have a financial hub where all the international law or the applicable, all the things are relating to this will applicable, and it is moving out. So, and this will be a significant global economic cloud will create in India. As you are aware that in India, earlier the listing was not allowed outside India if you are not listed in India. So first you have to list in India, then you can list it outside India. But in 2020 January, the government has come out with the circular, and then they have changed this, and then they allowed this. First they allowed the GIFT City, and then they allowed the other jurisdiction, but with some restriction. The Section 8 company, Nidhi company, and the net worth is minus, that company is not allowed. Otherwise, they have allowed this. But now, even then, they have allowed, but very few company has gone there, because I remember the Make My Trip long back, they wanted to list outside India without coming out the public issue. Then they formed a company outside India, and then they came out with the listing. So now here, the point which is coming that you can do direct listing, that regulation has come 2024. So in direct listing, the concept is that you can list without bringing a IPO in India. You can directly go there and list your company. Various regulations are there that they have modified, they have changed, they have given the tax benefit. Various things, they are similar to international market, like disclosure you have to give, global access is there. Multi-currency is there, but only thing is in GIFT City, the Indian rupees things is not allowed. Otherwise, all currencies are allowed. And then there are so many benefit to issuer and investor. Issuer, they have a international investor base is there, higher valuation they can get, diversified funding is there, foreign currencies, you can raise fund in foreign currencies. Investors can invest, Indian investors can invest, but it should be LRS, not the directly just like you are buying in BSC, NSC, that you can't do this. Then tax advantage. The GIFT City offers so many tax holidays, reduced withholding tax, debt instrument, exemption from commodity and security transaction tax, among other benefit, and fostering a business-friendly environment for other companies and investors. Uh, then incentive for funds. The framework include incentive for funds management entity, further positioning GIFT City as a competitive financial hub for asset management. This is creating a good business opportunity also, because it's supposed become a hub for fund management, fintech, global in-house center, other emerging sector. GIFT City is a state-of-art infrastructure. Smart city features contribute to the potential, attracting talented and global financial institution. And I remember my son is working in Dublin, Ireland. So when I went to Ireland first time, I saw so many international companies' offices were there. Google, Boeing, all airlines. And then I read it that in Ireland, maximum number of lease in the world is taking place in Ireland because of tax advantage. Now, GIFT City is also competing in this, and they have a aircraft leasing process, and that will definitely give a boost to Indian economy, and India will be hub on this. Then sustainability on ESG initiative is also they are taking shape, and there are so many green bond, which I think the other speaker will tell us that what types of environmental, social things they are covering through various sustainable finance. Then a SPAC, a special purpose acquisition companies concept is also there, and we will ask questions on this issue, that how this can be a good mechanism for this. And then opportunity for Indian startup. They are having an idea and they want to raise fund, and IPO they want to bring out, or they want to take it internationally, and that is another aspect. And the global competitiveness is also there, because the IFSCA aim benchmark GIFT City listing and regulatory framework for global standard. This will position GIFT City as a competitive alternative to traditional global financial center for IPO, debt listing, and fund management, and that will come. Difference, if I just say similarities are there, but difference is this: currency restriction in India, they are not trading in rupees, but other international other jurisdiction is not restricting other currency. Maybe they are not allowing in rupee, but they are not specifically mentioned. Accounting standards are applicable. In India, IFRS, US GAAP, India, this is applicable in UK GAAP, and US GAAP, that is applicable in that place. Lockup, I will request, lockup word is not good, so lock in, you have heard. So I thought lockup means they will locking up to the promoter or company shares. So that is 180 days. Other jurisdiction is talking, but some jurisdiction has a higher also. Tax incentive, what the way GIFT City is providing tax incentive, I don't think that is provided by other jurisdiction. They are giving, but they are having a higher taxation, US, UK in this. And before doing this, I will request Pradeep, but Pradeep, I just inform you, in 2014, somebody introduced me in the UK, GXC exchange. And there is an exchange that is also offering the listing without IPO. And then we invited GSC exchange to India. They came and they do the road show in Delhi and Bombay. And we invited around 50, 60 companies, and we have a webinar there, seminar there in Bombay and Delhi. And with SOCM, we did this program, and so many people came, they understood, and they were confused at how it can be. So the point is, sometimes ecosystem is also very important. Whatever you want to say, it is possible, but I'm deeply understanding that without IPO, I can't do, without money raising, I can't list. So that is their part. And then secondly, when I went to GXC, then there was a one client who wants to acquire a gold mine. So I visited Costa Rica. when I visited Costa Rica to buy a gold mine for him, then I came to know that Canada Stock Exchange is exclusively popular for mining valuation. So whatever valuation in the world you will get, the mining valuation is highest in Canada, and they know the subject, they know the things, and they understand, and they can tell you the real valuation. So when I was reading this, then I immediately recall that we organized this program in GXC, and then I saw today that GXC is still there. It is still there in UK. So with this introductory note, now I will request Pradeep to please tell us and enlighten us about this object of this GIFT City and the future opportunity and prospect of direct listing, and how the Indian promoter professional should come into this, and how they can take maximum advantage of this new concept. Over to you, Pradeep.
Thank you, sir, and thanks for a very lively introduction. And so many points were actually made by you in your introduction itself, and some of them were also of news to me, particularly this GSC thing, because I didn't know about this GSC thing earlier, that you had brought them to Delhi and Bombay, so that is news to me. And it's always an honor to be on the Corporate Professionals webinar, because it's a very untiring effort and you have to do it with so much passion. So we are so happy to be part of this. This is the first webinar that actually we are doing on on this listing in the IFSC. So and I hope this is useful. And I'm also overwhelmed with the fact that there has been a very overwhelming response to the programs, almost 500, 600 registrations. So I really hope we will be doing justice to this time. So I'm going to give an introduction to why we are doing what we are doing, and how are things going to be different, and how they are going to how these how it presents an opportunity, right? So for companies and investors alike. So see, we got our independence in 1947, right? And from 1947 until 1991, we're following some sort of a socialist form of economy, as one may call it. You may call it mixed economy, but those were the days when you have to wait for 6 months for a for a scooter, 3 years for a landline, and all that. Those were the days, and what essentially was what you call as a license Raj, and this extended to the capital markets also, where the regulator did sit in judgment on who could raise money, who could not raise money, if you could raise, and whether it would be at the par value or at a premium and all that. And in 1991, we were forced to ship gold to the World Bank to take loans, and our foreign exchange reserves had all but dried up. And this was the time when we decided that, okay, we have no option but to liberalize, right? So that was one of the master strokes, and what I would call as a second independence for our country. Because from 1991 onwards, things have drastically changed. And after 1992, we had SEBI coming into being. The entire market moved away from merit-based regulation to disclosure-based regulation. Then SEBI brought in innovation after innovation, mutual funds, alternative investment funds, and whatnot. So the Indian capital market grew and grew and grew. So today, so much so that it is probably one of the few most attractive markets in the world. And we are number one as in terms of derivatives. We are probably number 4 largest number of stock exchanges in the world, largest stock exchanges in the world, and all that. And we have been, making waves, and there are investors who are lining up to invest in the country. Wherever we have gone, and I have made a few trips of late, there is no need for you to sell India anymore. They know about India. They just want to know how to come to India, right? So that is a huge change from what it was at one point in time, because we were all there at that point in time. So we know that sticking posters for India was one of the biggest things we had to do. That was not required anymore. Now, to take this forward, which I would call maybe to use a very expansive term, the third independence. And the third independence as far as economic independence is concerned, is where India says that, okay, let me do something for the world. Let me do something for the Indians who have gone out of India, right? So this is what is happening in this third phase. So we have, a huge population, 1.5 billion. and we are the largest in the world. Every sixth person in the world is an Indian. So that one point in time was considered to be our bane, but this is a boon because it actually is going to give a lot of demographic dividend to us, right? That is what is happening. Over a period of time, we look at the top CEOs in the world of whether it is IT companies or manufacturing companies and whatnot, we have Indians everywhere. And many of them are keen to either come back to India or take a pie of India or want some Indians to invest in these companies. They want some Indians also to take some part of their companies. So towards this, we thought the thought process was that, okay, let us form an enclave, right? An international finance center as to and to make the Indians who have gone abroad come and take advantage of this, because one of the most important things for a country that is going to be free is capital controls, right? And capital account controllability. So that is still there in the domestic region. So we thought that why don't we establish a sandbox, right? So, and in this sandbox, we'll sort of experiment with all this and see what is the dividend it can sort of, it can sort of weave for the investors and issuers and others alike. So with this thought process was when the IFSC was actually formed. But in fact, in 2007, there was a report by Percy Mistry on to make Mumbai as an international finance center. I'm happy that it didn't happen because it's so difficult to even get out of any office area in Bombay. So anyway, Gujarat was the city that actually bit the bullet and said that, okay, we will establish an international finance service center. Initially, when it was established, we had various regulators from India getting in and then sort of saying that, okay, when it's capital markets, SEBI would do it and banking, RBI would do it and whatnot. So in 2019, we said that, okay, there needs to be an integrated regulator for this place. And that's how IFSCA came into being. Ever since then, we have ever since we have sort of had some 30 regulations on different verticals like insurance, banking, and whatnot. And like you very rightly also explained, very interesting things like ship leasing, aircraft leasing, now even GCC and BATF, that is your accounting and whatnot, and taxation and all that. So one part of the piece, one piece of the whole pie, which had to be sort of ironed out, was this place becoming a hub for raising finance, right? Already bonds were doing the job. We almost have 100 odd bonds being listed here, and almost $60 billion has been raised from this place. Very interestingly, even green sustainable social bonds also have been raised from this place, and it is actually going on very successfully. Arrangers and issuers and investors are very happy about this place. We are also fixing another piece of the puzzle, that is a rating piece. Within 1 week, the first rating agency which is going to do a global scale ratings is going to get launched in the IFSC, and that is also a moment of pride for us. So in 2023 July, the finance minister, honorable finance minister, said that we are going to make Indian companies list on outside jurisdictions, outside jurisdictions, and that is how the thought was, okay, first let us to start with, instead of starting with a London or a Singapore, let us start with our own IFSC, right? So that is how the IFSC listing came into being. However, the first steps were taken only in January 2024, when the LEAP rules were brought in, allowing companies to list in other jurisdictions, permissible jurisdictions, essentially the IFSC. And carve-outs were made in the Companies Act, and then certain changes had to be made. Very recently, the minimum public holding, etc., was done, which Arjun and Shubham and Akash will sort of explain to you. So certain changes were made, and thought process was then done. Already we had a listing regulation. It's not that we didn't have a listing regulations. We had a listing regulations for debt and equity issues. But then the thought was, let us make it a little different, because they were sort of created at that point in time with the ICDR and domestic regulations as ladder of inference. But then over a period of 3 years, a lot of experience had been gained by the officials here, and also because of a lot of interactions with the international, which is why it's always important to have more interactions. The more you keep your mind open, the more things will follow. So then we said that, okay, there are many things like light touch regulations and a lot of international practices, like allowing it to be offered to one person, underwriting and whatnot, which had to be sort of brought to this place, which are not sort of, we will not be able to sort of do those experiments in the domestic market. So with those thought processes, we had drafted the new listing regulations. We had opened them for comments. There are a lot of comments from various parties, stock exchanges, market participants, investment bankers, and whatnot. So, and finally, after a lot of consultation and a discussion at our authority meeting, finally the listing regulations came into place. Now, the listing regulations, I should also tell you that while we have brought in our listing regulations, already there has been a lot of interest from 5, 6 issuers who have with Indian parentages, but these issuers are located abroad who want to already list on our exchanges. And this is, I believe, is a matter of happiness and pride for us, because it means that people have already started evincing interest in listing in this place. So, what we would want to do today is that we want to tell you as to what is contained in those listing regulations, who can list in this place, and what are the conditions, and what is it that we mean by light touch, and how light is that light touch, and who are all the intermediaries, etc., who will be involved in this. What will be the post-listing formalities? Is it so heavy as in the domestic jurisdiction, or is very light touch as again in the international exchanges? And how will the investors come in, and how will you open your accounts? Who are the depositories involved? A lot of these questions will get answered in the next hour or so, where Arjun and Shubham and Akash are going to take you through the presentations. So with this, I would like to stop, and I'm going to ask Arjun to kickstart the proceedings with the presentation.
Okay, thank you, Pradeep. Thank you very much. You have rightly pointing out really we have faced the problem of that everything. When I came to Delhi first time, my friend suggested me that you book a telephone. I told him that अभी तो I am studying. बोला हाँ कोई बात नहीं. When you are complete your study and do this, तो आ जाएगा. So that was the scene. So it is absolutely right, and this the way we are doing. The only thing is that you have created a infrastructure things. Only thing is now there is a education and popularization is required.
Yes.
People should understand the way the SME market is going on, and everybody is planning to bring out IPO. The same thing should also be there for the good. And my rider is same thing. Good companies, not the bad companies, should come forward and take advantage of this. So over to you, Arjun, for your presentation. So I hope whatever queries in the mind of people they have, it will be over, and then we will ask questions which are not there in this.
Sure. Thank you, sir. So there's some echo. Just one second. Okay. So I hope the PPT slides are visible.
Just go to
Maybe
slide.
what Hello.
Go to slide share mode.
So what I will do is today in my presentation, I will briefly cover about the concept of GIFT City, the role of IFSC, what are the business opportunities, the capital market ecosystem which we have, and then we will go into deep dive discussion into direct listing.
Arjun, yes, now it is okay.
So GIFT City is it is a concept started as a smart city. It's started in 2007-8, Gujarat International Finance Tech City. It has two parts. One is the domestic tariff area, which remains part of the domestic area and regulated by the respective regulators, SEBI, RBI, IDA, and PFRDA. And there is a special economic zone, which is 1/3 of the area. The total area is 886 acres. And special economic zone, again, there are two types of entities. One is multi-services SEZ unit. They can also function. And GIFT City Special Economic Zone has been notified as the first and only international financial services center in 2015. But most of the entities which are present in the SEZ entity are for financial services and IFSC units. There are very few which are the SEZ units. So I think most of the background has already been told by ED sir and Vijay sir. So, but very briefly, there are mainly 3 or 4 objectives which is for GIFT City and IFSCA. One is onshoring the offshore. There are various India-oriented businesses which are being carried out from various parts of the world. For example, fund management. We have many FPI, FDI investments coming from various jurisdictions where it is just the pooling happening. Maybe it is a Mauritius or Singapore, Cayman Islands, Ireland, Dublin, Luxembourg. So why not have our own center where we can bring back those funds into the Indian territory and they can invest into India. So that concept we have onshoring the offshore. So one example I gave for the funds. Similarly, this second best example is the Nifty Connect. So we had our Nifty futures, which was trading on Singapore exchange. So we have been successful, have been able to bring it back to Gift City. The third example is in the case of bond listings. So previously there were several foreign currency bonds and masala bonds which were listed in foreign markets. So why not they list within India on the international exchanges? So there are many other examples, as sir was mentioning about aircraft leasing. So more than 50% of the aircraft leasing happens from one city, that is Ireland, Dublin. So why not even our Indian airlines were being leased through Dublin. So why not have our own center where we can have onshoring the offshore? The second objective, which is very important, is gateway for inbound and outbound capital. So with more focus on getting more money into India inbound, and so can we be that jurisdiction where we can attract more and more capital for India? And as we all know, India is now the fastest growing country in the world, and the targets are from $4 trillion. It is expected to reach to around $55 trillion as per the book India at 100 by 2047. So there are huge capital requirements. So GIFT IFSC can be the gateway for that. The third is, can we work closely with other jurisdictions? So in terms of global connect, we are already working. So India International Exchanges, they are having a cooperation agreement with Luxembourg Stock Exchange with regard to bond listing, and NSE is having connect with Singapore Exchange. So we can work with different markets and work closely with them. And the fourth objective, which is very important, is over a period of time, we can become regional hub and global hub for various financial services, whether it is fintech or sustainable finance, fund management, and many other activities. So I have put in the slide some of the quotes by Honorable Prime Minister for Gift City. So we want to make Gift City the global nerve center for new age global financial and tech services. And there's a focus on cutting edge digital infrastructure and gateway for connecting India with other parts of the world. So IFSC was established by the Act which was passed in December 2019, and we became the regulator with effect from October 1st, 2020. So we have the mandate of development and regulating the financial institutions, financial services, and financial products, which means we are a unified regulator. So we regulate whether it is banking, capital markets, fund management, insurance, pension fund, everything comes under one regulator. And right now, the focus is both on development and regulation. So when we develop the market, we come out with appropriate regulatory framework for regulating those services. So in terms of the Act, we have powers of all the 15 acts of the respective regulators plus IFSC Act, making it 16. So we can exercise powers of SEBI Act, Depositories Act, SCRA for regulating the securities market and the entities in the IFSC. So in terms of applicability of various laws in IFSC, so I have been, this slide will help in understanding the concept. So as Pradeep sir was mentioning, in terms of capital controls, there are no capital controls between IFSC and other parts of the world. So in terms of FEMA, the entities are considered as non-resident, which means there's absolutely no restrictions in terms of movement of capital from IFSC to any other part of the world. And if investments happens from IFSC to India, it will go through the FDI PI route or FVCI route, whereas as similar to any other foreign jurisdiction. As sir was mentioning, INR is not permitted here. So we have permitted 15 currencies, and most of the transaction happens in US dollar, but we have list of those 15 currencies permitted in our banking regulations. In terms of taxation, we fall under Indian Income Tax Act, and the carve-outs have been provided in the Act itself for IFSC. So we are having a different dedicated slide for the taxation in IFSC. In terms of other laws, we are considered as part of India only. For example, Companies Act applies here. The companies which are set up, they fall under the Indian Company Act, and they are required to comply. There are several carve-outs which has been taken separately under Companies Act and using powers under Section 31, so which gives central government to modify any other central law. So briefly, I have captured this slide. So we are a unified regulator, 15 currencies, attractive tax regime, full-fledged financial ecosystem with global connects. And our regulations are benchmarked with our competing jurisdictions, so ISCO principles and other international centers. We have a strong sovereign support and strong support from state government. And in terms of our advantage with comparing to other financial centers, I believe that most of the other financial centers are now at a saturated stage. But considering the growth story of India, we have huge advantage in the coming years. So we have access to large hinterland Indian economy. We have our strength as NRIs, as and Indian diaspora, which sir was saying, I mean, we have huge Indian population in various countries, so they can make huge investments. Cost of operations in India is less compared to other jurisdictions, and we have a huge skilled talent pool available in India. So as sir briefly mentioned, more than 30 regulations have been issued by IFSCA. So this slide gives a list of some of the important ones. In terms of the securities market, we have mainly 4 regulations. One is on the listing side, which we'll cover in more detail. We have fund management regulations. We have capital market intermediaries regulations, which gives unified framework for all the intermediaries operating here. And we have market infrastructure institutions regulations, providing framework for exchanges, depository and clearing corporations. So these are some of the numbers. When we started the journey as an IFSCA, October 1st, 2020, we had 129 entities. From 2015 till 2020, it was 129. But since IFSCA has been formed, it has quickly jumped from 129 to close to 700 entities right now we have in last 4 years. The turnover on exchanges, it is increasing, and August last month, the monthly turnover was USD 101 billion. This is largely into the derivative side. We have banking asset has increased to USD 65 billion, debt listing close to $60 billion. EIFs, we have more than 150 funds set up in GIFT City. Now aircraft leasing, we have 86 aviation assets leased, and the targeted corpus of funds is close to $40 billion. So these are some of the names. In the banking side, we have many foreign banks present here. On the fund side, we have many big names. These are some of the indicative names. We have the concept of ancillary service providers, the entities who provide support services to various entities here. So we have Big Four consultants, some of the names. We have law firms, we have trusteeship firms, administrators, and other ancillary service providers. So there are other entities into the fintech side, TechFin side, and Global Capability Center. Bank of America is GIC. We have insurance companies, we have TechFins, and we have ship leasing also. So Reliance and ArcelorMittal into ship leasing. And in the last column, these entities are in the domestic side. So not regulated by us, but we have presence of IBM, Google, Capgemini, TCS in the domestic side of GIFT City. Tax, this is very important. So tax, the entities present here, they have a tax holiday of 10 out of 15 years. So in the initial 15 years, they can choose any consecutive 10 years. So entire business income is exempted. On the securities which are listed on IFSC exchanges, there are no capital gains for foreign investors, no CTT, no STT, no GST on specified securities. The debt listing, it's very important. So many Indian issuers are now listing their bonds, foreign currency bonds on our exchanges. Withholding tax is only 9%. And if they go and list to any other market, it will be as per the agreement between India and the country, which can range to 15%, 20%. So it's a very big differential when it comes to listing of foreign currency bonds on the exchanges in IFSC. We have a competitive tax regime for funds. And as I mentioned, there are more than 150 funds which have already been set up in the last 2 to 3 years. And there are additional benefits given by Gujarat government. So very briefly, I will capture the some of the important sectors. Banking, it's very important because banking complements the securities market. So we have presence of several foreign banks here, and most of the Indian banks are already present here. So close to 30 banks are there, and we have all the big names present here, Stancy. So you have American banks, we have European banks, we have banks from Japan, banks from Singapore, and recently Australia and New Zealand Bank, they are also setting it up. So, and we have the foreign branches of the PSU banks also. Funds industry, so close to 158 funds. We have 3 categories of registration depending on the type of fund which you want to, sorry. And there are various investors into the funds. We have sovereign wealth funds, pension funds, which are already investing. In fact, RDI has set up their own shop here in GIFT City, and we have the entire ecosystem around fund management. So these are some of the names. Coming to capital market ecosystem, before we go into direct listing, so we have two international exchanges. One is the subsidiary of BSE, India International Exchange. NSE International Exchange is the subsidiary of NSE. We have two clearing corporations. Both were launched their operations in 2017, India INX and NSE International Exchange. We have two clearing corporations for respective exchanges. We have one depository here, India International Depository, and the holding company of the depository is the consortium of 5 institutions, NSE, BSE, MCX, NSDL, and CDSL. We have several intermediaries operating here, more than 125, broker dealers, around 80, clearing members, DPs, investment advisors, investment bankers, custodians, and as mentioned, now next week we'll have a launch of the first credit rating agency in GIFT City. The products which are currently available mostly on the derivative side and the bond side. So equity index derivatives, currency derivatives, USD INR derivatives, gold futures in the commodity side. We have one secondary listing of DR, a $60 billion of bond listing on both the exchanges. And now we'll move to the time has started for equity listing to happen on the exchanges. These are additional products which are offered by both the exchanges for the Indian investors if they want to access global products. So NSE International Exchanges, they have brought it the concept of unsponsored DR of US stocks, where the US stocks are converted into depository receipts, and those depository receipts are traded on their platform. India INX is having different model, where a subsidiary of India INX Global Access, they have tie-ups with global international brokers, and through those tie-ups, they provide directly access to the foreign markets. So this arrangement covers most of the exchanges in the world. Direct listing, the main topic for today's discussion. So the concept of direct listing means for the first time in India, an unlisted company has been allowed to directly list its equity shares outside of India. So it's on an international exchange. Otherwise, previously they have to first list on NSE, BSE, and then go through in the form of DR. It can be ADR or GDR. But now an Indian company can directly list its equity shares on an international exchanges on the GIFT City. So as sir mentioned, the announcement was made on July 28, 2023 by Honorable Finance Minister. And as the announcement is very clear, it covered both unlisted companies doing an IPO and listed companies doing a direct listing of equity shares on IFSC exchanges. So this is a brief journey. So the concept of direct listing actually started much earlier. So this was recognized in a report, expert committee report, which was constituted by SEBI. And it was in December 2018, where they recommended several reforms for Indian companies listing on international exchanges and foreign companies listing on Indian exchanges. So there was a recommendation on direct listing, and there were certain amendments made in the Companies Act under Section 23, 3 and 4 to enable listing of Indian companies outside of India, but those amendments were not commenced. So the announcement was made July 2023, and commencement happened in October 2023 of sections 23.3 and 23.4. So in the meanwhile, we constituted a working group which was chaired by ED Shri Praveen Trivedi, IFSCA, to identify issues, regulatory issues which may come up for a listed company doing a second listing on IFSC exchanges. So these will be dual listed companies. So how will the regulations apply? How will the depositories connect? How will it actually operationally happen? So there are several recommendations made in the report, and the report is available on our website. This was submitted in December 2023. So on the date, the rules were notified. So there were two rules, one under FEMA, notified by Ministry of Finance, DA. The other were rules under Section 23.3 under the Companies Act. So both the rules were notified on the same date, January 24th, 2024. And on the same date, we thought it's a very good opportunity. We should also review our regulations. So we issued a press release inviting for suggestions from stakeholders on our previous old regulations, which was 2021. We constituted a standing committee of experts, which is chaired by Mr. Mohan Das Pai, and we have experts from various fields, including investment bankers, law firms, issuers in the committee. So the committee suggested that instead of doing piecemeal amendments, you benchmark your regulations with the best practices followed in other parts of the world. So a subcommittee was formed, and we benchmarked our regulations with IOSCO principles with other jurisdictions, and we proposed amendments in our regulations through a new set of regulations, IFSC regulations 2024. Consultation paper was issued in May 2024, and the final new regulations were notified in August, that is last month, for listing of equity shares, bonds, and other listing. So, as I briefly mentioned, there are two rules under issued by Central Government of India for direct listing scheme under the FEMA, and companies listing of equity shares in permissible jurisdictions. In short, we normally call it as LEAP rules. LEAP rules under the Companies Act. And government also issued FAQs for explaining the concept of direct listing and the benefits of direct listing. So direct listing covers both the aspects. One is issue of new shares if a company wants to raise capital, or it is offer for sale where an existing shareholder wants to make exit by offering shares to the public. So it covers both the aspect because there are many PE investors who wants to make exit after listing. So that will actually facilitate more startups also. And in fact, in India also, if you see, the OFS component is significant in the new IPOs which are coming. So the rules cover both unlisted and listed. So unlisted, everything is now in place. Listed, we are working with SEBI because there are amendments required in various regulations issued by SEBI for regulating dual listed companies. Permissible holder, so direct listing of Indian company, only non-residents can participate. So it's mainly NRIs, FPIs who are already registered, or other foreign investors who are not registered as an FPI, and other non-residents which are set up in IFSC because they are also technically non-resident under FEMA. So those non-residents can participate in the direct listing. And with respect to investors coming from countries sharing land border, so they can invest only after taking approval of Government of India. So the press note requirements. So since these are Indian companies raising capital, foreign investment limits will apply. So they are subject to FDI restrictions as per sector. So right now, I think most of the sectors, they don't have 100% is permitted in under automatic route. Should not be a problem, but it applies to FDI limits. And the foreign portfolio investment limits also applies for investors investing into Indian companies. In terms of pricing, for an unlisted Indian company to do an IPO on our exchanges, book building has been made mandatory in the rules itself. So it's a mandatory requirement for doing an IPO, and it should not be less than fair market value. So as I briefly mentioned, when we came out with the new regulations, we have considered IOSCO principles into mind, principles 16 to 18, which are there, which are the global standards for all the regulators in the world to follow. And there are assessments by IMF, World Bank, FSAP assessment which happens. So we have kept IOSCO principles in mind. We have studied the global best practices, mainly in US, UK, Singapore, Hong Kong, while coming out with the regulations. We believe in ease of doing business, so provide more flexibility to the issuers wherever possible so that the timelines are simpler and the processes are simpler. And the regulations cover listing of both Indian and foreign issuers. So our regulations cover IPOs and FPOs. SPACs, we have a chapter in SPACs because we issued our old regulations in 2021. SPAC was very popular at that point of time, so we have continued in the new regulations. We have, since we work closely with other markets, we have permitted secondary listing. So if a company is listed in outside of India in other market, they can choose IFSC exchanges as a secondary listing option. We have the DRs in our regulations. We have listing of debt securities. We have a separate chapter on ESG, the requirements which are required to be followed. And we have permitted other financial products beyond securities, commercial paper and certificates of deposit. In fact, today we had an authority meeting and the detailed guidelines for CPs and CDs have been approved. So we'll be coming out with circular on CPs and CDs. So coming to equity listing and IPO by an unlisted Indian companies or a foreign company doing an IPO on our exchanges, these are some of the requirements. Eligibility criteria, we have 3 criteria, and these are optional, either revenue or profit or market cap. So you should meet one of these criteria. So revenue test of USD 20 million or pre-tax profit of USD million. And market cap is basically most important for the startups in case they're not able to meet revenue or profit because they are new. So if the investors feel that the company is having sufficient valuation and they get the post-issue market cap of USD 25 million, they can come with an IPO. In terms of filing of offer document, so all the offer documents are required to be filed with IFSC for seeking observations, except for issues which are less than USD 50 million. So they can file with us, but there is no need to wait for IFSC's comments. They can, they can take in principle of approval of the exchanges and go ahead with the IPO. So it's much faster for those companies. Disclosures in offer document, it's a mix of both principle based and some detailed requirements we have sought. So all material disclosures which are relevant for the investor to make a decision has to be disclosed. This is coming from the ISCO principles. Financial information should not be older than 135 days. So this is something which we found in other markets. So this should not be older than 135 days. And accounting standards, only those standards which are internationally accepted, globally accepted, has to be followed. So accordingly, we have recognized IFRS, US GAAP, or Ind AS. In case a company is coming from any other jurisdiction who is following its local accounting standard, they can still follow, but they'll have to reconcile with IFRS. So those are requirements in our regulations. In terms of the offer document, the disclosure should be there about the offer document summary, risk factors, about the offer, general information, capital structure, particulars of the issue, underwriting, tax implications, financial statements, material RPTs, and other requirements like legal information, details of major group companies, and other regulatory disclosures. So this is very similar to the requirement in SEBI. So we have once the offer document has been cleared by the regulator, there is a period of 12 months for the issuer to come out with the IPO. So, and the offer period, it can be, since we are dealing with mostly institutional investors, it can be 1 working day also, or more, or 10 working days. So they have a range of 1 working day to 10 working days, which the issuers and the merchant bankers can choose. Pricing for foreign company, it can be either fixed price or book building. For an Indian company, they have to follow the requirements in the direct listing scheme under FEMA, which means they can come, they can do only through book building if it's an unlisted company. This is very important, minimum public offer. So we studied the best practices in various countries. So what we felt that some of the countries, they're having 10%. In fact, UK has recently, 1 or 2 years back, they have moved from 25 to 10%. So our requirement says that the MPS is 10% for a foreign company, and for Indian company, it is as per SCRR, and based on a request, government has changed in the SCRR, and the 10% is applicable for Indian companies doing an IPO here. So this is particularly beneficial for the startups. So most of the startups, in case they want to do an IPO, they can still retain control of the company, and they can do an IPO by giving 10% to the public. Globally, there are many companies who do a underwriting. So most of the issues are handled by the underwriters. So we have permitted underwriting, and subject to all the disclosures regarding underwriting arrangements in the offer document. So the IPO can have anchor investors. So those details they can disclose in the offer document. Monitoring agency here in IFSC, since they are dealing with investment, largely institutional investors, and there is a requirement to disclose use of proceeds, deviation in use of proceeds on a quarterly basis. Monitoring agency, we have kept it optional. In case the issuer feels that they want to appoint, they can appoint credit rating agency as a monitoring agency, or in case they feel that it will give more comfort to the investors, they can appoint, but it's not a mandatory requirement here. So as Vijayji was mentioning, we are using lockup. So this we have again taken the term from foreign market, but lock-in requirement, which we normally call it. Here it is for the promoter and the controlling shareholders. It is 180 days, 6 months lock-in, only for the promoters and controlling shareholders. So what are the benefits for the issuers? So one is for an Indian issuers who are looking for investments from foreign capital, from foreign investors, institutional investors, new class of investors. They can come here and they can get a better valuation. So the market is now open. They can have a domestic investor if they want to go to India. If they want to come here, they can have better valuation from the foreign investors. And this also gives a choice to the issuer. So diversification means they can have equity listing in rupee on the exchanges in India, NSE and BSE, and they can have a equity listing in USD or any permitted foreign currency in IFS. So there are 2 choices available for the issuers. And a listing on an international exchange will give global visibility, and it will also help those companies who wants to expand outside of India. They can raise capital in US dollar, keep US dollar in the IBO in the IFSC, and use those US dollars for their expansion plans. So there is no need to bring US dollar to India, convert into INR, and again move INR to dollar. So that pain they need not take. So that will actually give comfort for the issuers who are having plans to expand outside of India. And as I mentioned it, the direct listing covers offer for sale. So it's a very good opportunity for PE investors or other investors who want to make an exit from the unlisted companies. They can come out with an IPO for providing such exit and unlocking the value for the investors. From the investor perspective, there are various benefits because the idea is to attract foreign capital. So for the foreign investors, there is no tax. I mean, no capital gains tax, no STT, no GST, which is a huge benefit for those investors to come to IFSC. And the transactions will happen in US dollar, which foreign investors or their foreign currency, which normally foreign investors prefer, and there's no need to hedge their positions. Otherwise, if they want to take an INR position, they may want to hedge also. That cost they can save. And the exchanges in IFSC are open for a very long hours, to 20 plus trading hours. They cover all the markets starting from Japan to US. So this will give more flexibility to the issuers in terms of timing also. So as ED sir was mentioning, right now we are seeing interest coming from many foreign companies. So there are foreign companies set up by Indian promoters. So they now see India as a very attractive market, and they want to come back to India for listing. So our international exchanges, NSE and India International Exchange, India NX, they are the good options for those foreign companies to list. And in case of a foreign company, even the Indian investors can participate. So LRS money can come in, the retail can participate subject to those LRS limits. Mutual funds can participate subject to those limits, $7 billion limit. So this is a very good opportunity for those foreign companies to come back to India and do an equity listing. So in fact, there are estimates that more than 50% of the Indian unicorns who are having operations in India set up by Indian promoters are actually domiciled outside of India. So they have formed structure in US, Singapore, and UK. So instead of doing a reverse flipping, they can do an IPO here on the international exchanges. In terms of post-listing obligations and disclosure requirements, so we have tried to incorporate requirements which are essential for the investors to know. But at the same time, we wanted to avoid unnecessary compliances which probably may not be relevant, because we're not dealing with retail investors, Indian retail investors. So we have mandated shareholding pattern, financial statements, disclosure of material or sensitive information, disclosure of board meetings, EGMs, change in directors, change in KMPs, compliance officer, resignation of auditors, if there are any adverse opinion by auditors, details of encumbrances, annual report. We also have requirement on sustainability reporting, because this is something which is now globally very important. So any company with market cap more than $50 million, they are required to do a sustainability reporting based on global standards. So we have recognized ISSB standards S1 and S2 and GRI, and they can also choose BRSR if they want, Indian company. So GRI or ISSB or BRSR for sustainability reporting. We have in the new regulations introduced the mandatory requirement for the companies to have whistleblower mechanism. So coming to debt listing, since there are several listings that are already taking place, so I thought briefly I will cover debt listing as well. So in terms of bond listing, our exchanges provide several benefits compared to foreign markets. It's, I mean, there is a completely ease of raising funds. Our regulations are light touch. Most of the bonds are privately placed. So in fact, they are not required to file any document with IFSC. So they can directly go to the exchanges, they can apply for listing, and they can do the bond listing on the exchanges. So our regulations are aligned with global exchanges in terms of bond listing, whether it is normal bond or whether it is ESG labeled bond. So I'll come to the ESG part. I'm having a few slides on that also. The process is very transparent, very simple. So they can approach exchanges and do the cost competitive listing fees. The listing fees by our exchanges, it's one of the lowest in the world when we did a comparison with some of the competing markets. And there are some tax benefits which I already mentioned. And the bonds which are listed on the IFSC exchanges are permitted to use the ICSDs, I mean International Central Security Depositories, Euroclear, Clearstream, DTCC, or they can use our depository, India International Depository. So in fact, the recent ones are using IFSC depository for their bond listing. So coming to ESG labeled bonds, we have a separate chapter where we have framework for listing of green bonds, social bonds, sustainable bonds, and sustainability linked bonds. The first three are user proceeds, where the proceeds of the bonds are required to be used for such projects. So green bonds means green projects. The proceeds means social projects, or a mix of both green and social. The fourth one is innovative, and it is mostly in the global markets, and where we have sustainability linked bonds, where the proceeds will not be necessarily used for such projects, but the proceeds can be used for anything, but they have some KPIs and SPTs in mind. And once they have meet those targets, the structuring of the bond will change. The coupon will depend on whether you are meeting those targets or not. So those are now new instruments which are very popular. And in fact, we have listing of all those four categories of bonds on our exchanges. And recently, expert committee has also given recommendation for a new category of bond, transition bond. So we are working on the framework. Very soon we'll have a consultation paper on transition bonds as well. So in terms of the framework, what we have said, the issuers are based in India and the investors are from various parts of the world. Mostly it will be in Europe or US. So we have said you can, the issuer can choose any one of these globally recognized frameworks. So the bonds can be as per ICMA standards, as per climate bond standards by Climate Bond Initiative, or it can use European Union taxonomy or the Asian taxonomy. This is between the issuers and the investors to decide. But these should be the globally accepted, these 4-5 standards which we have accepted. So these are some of the disclosure requirements, pre-issuance disclosures in the document. So in terms of green, social, and sustainability, use of proceeds bonds, ESG objectives of the issue has to be disclosed, the process for evaluation and selection of projects, the proposed utilization of proceeds, and the procedures to track the deployment. And they are required to disclose on an annual basis, utilization report, allocation report, and the impact report, both in terms of qualitative and quantitative terms. And SLBs are slightly different. So all the KPIs, SPTs, those targets have to be disclosed. And there's a mandatory requirement for all the GSS plus bonds to have an independent external reviewer to see that these bonds are aligned with those globally accepted standards which they have chosen. So these are some statistics. So we have close to around $60 billion listed on our exchanges. And this is slightly old. Right now it's $13 billion ESG labeled bonds. And we have listing of all the four categories: green bonds, social bonds, sustainable, and SLB bonds. So as per reports, the requirement for India to meet the net zero target by 2070 is $10 trillion. So there is a huge opportunity for IFSC to play an important role when it comes to bringing foreign capital to meet the requirements of the green projects or meeting the net zero ambitions of India. In fact, there are two social bonds which were mentioned as case studies in the G20 report under India's G20 presidency. One is Awas Financials Limited social bond, which mapped 3 SDGs: gender equality, decent work and economic growth, sustainable cities. This was basically for financing home for women, mostly targeting towards that. And the other was on Shriram Transport Finance, which was basically providing loans for truck drivers and other things. So those SDGs were massive. So these are case studies which are presented. Today, in our authority meeting, the framework for commercial paper, detailed framework, and certificates of deposits have been approved. So we'll be coming out with circular very soon. So we'll have a listing of CP also. CP, since it's a short-term instrument, it is under ECB guidelines, Indian issuer cannot do. So it's only for the foreign issuers or the issuers based in IFSC, and they can list CP. And we can have certificates of deposit issued by the banking units present in IFSC. So close to 30 banks we have. So they can list CDs. These will be new products which will be added in the IFSC ecosystem for the exchanges. So maybe I will stop here and for any questions on the presentation. So over to you, Pawan sir or Anjali.
Thank you, Arjun. Thank you very much. Now, very nice presentation which you have given. I think most of the issues, things, how it can go is.
You're on mute, I think.
I'm able to. Are you able-
Now we can hear you. Sorry, we were on low volume. Yeah.
Okay. So my suggestion is that now Shivam or Akash wants to share something. Shivam Goel and Akash, you want to share anything? Or you have to unmute yourself, Akash. Shivam, you have to unmute.
Yeah, so basically, I think presentation has been given by Arjun sir. So
Okay.
there nothing more in terms of slides. So there are few things which I just want to highlight, specifically from the taxation point of view.
Yeah.
Basically, I think like Arjun sir had told in the taxation slide that there has been exemption from the capital gains tax. So if the securities are being traded on the recognized stock exchange in IFSC, then there is no capital gains tax for the non-residents. So if the equity is coming on India, whether of the Indian company or the foreign company, this is one of the advantages which non-residents will be having. So for example, if the FPI who is investing in an Indian company which is there on the stock exchange in India, vis-a-vis the company, if it is listed on the stock exchange in IFSC, then the non-residents will be having the advantage of capital gains tax exemption.
Okay.
The other thing is, if that non-resident is having only the income only from that capital gains tax, only from the capital gains on the stock exchange in IFSC, then the requirement of PAN is also not there. So like in India, for the FPIs, the PAN has been made mandatory. Here, the requirement of PAN will not be there. Only a quarterly statement needs to be filed by the broker dealers with respect to some of the informations in the specified form. Then the PAN requirement is will also not be there. So there are a few things which have been given as an incentive for the non-resident investors in IFSC. At this point of time, the participation of resident is not permitted. This is something which we are taking up with the government. If it can be permitted in the unlisted Indian companies, and also for the foreign companies, for the foreign companies, the participation of residents will be permitted, but that residents will not get the advantage of that capital gains tax, which I was talking about for the non-resident investors. So there are a few things which I just wanted to say.
Okay. Okay. So Akash, you have any point? Then I will start question answer.
Yeah, like most of the points are briefly covered by Arjun sir and Shubham sir. Just to add a few points from my side is we have been recently have been discussing a lot with many issuers who have been keen to start listing in the GIFT City. If you have look at the presentation and all, it is quite evident that fund ecosystem and the debt listing have taken off. Currently, we're all gearing up for the direct listing to be taken off. We have been having rigorous meeting with the exchanges, investment bankers, and issuers. Some of the foreign issuers who are based out of US, Middle East, and all, they're keen to raise capital. Like I just want to share a experience like I had yesterday. Yesterday I was part of meeting IFSC's primary markets network, where roughly around 45 to 50 international security market regulators have come together and they have been discussing regarding the IPO markets all across the world. The scenario is completely diabolical when it comes to European markets and the Indian markets. We have been seeing the IPOs coming out left, right, and center, and there's a dud in the Chinese market. And in the Europe, the big issuers are not approaching the primary market; they are going by the private funding, opposite of how the startups are going in the Indian scenario. And they have been discussing that most of them are looking to streamline their respective regulations as well. So although we have benchmarked our regulations to the best of the global standards, we are hopeful that we remain the best in the jurisdiction to come across.
Okay. Okay. Thank you, Akash. So now let's what we can do. We have received so many questions, and we have identified our own questions. So first, on some macro issue, I will ask, then Anjali will ask the investor point of view and the point of view of the issuer. Before this, Pradeep, I just want to show you. Shivam, can you just? I was just searching from my record. This program we organized in GXC joint program with SOCM in 2012, sorry. So this GXC market was there, and we invited And then what is GXC? They have mentioned, and this Liam McGarth is the chairman of this, and then
Very interesting.
Salman, he also came. Okay, next. Shivam, next. It was a free program. And
Okay.
then
Very
we have,
interesting.
yeah, and we have some photograph of that program, Discover.
Oh, okay. You have amazing record keeping, I think, skills, or maybe I think your team should really be congratulated for this, maintaining all records.
Yeah. So they came, and so many people came for that program. Okay. Madan sir
I
was.
think you're on mute.
No,
No, we can hear him, sir.
okay, so this was the program. Okay, Shivam, now go to the question. So now I will start questions which are there. Now, first is, why should Indian companies, especially mid-size or tech firm, consider direct listing at GIFT City instead of pursuing an IPO in domestic market or internationally? This is
Okay, so I will just add something, and then I'll request my team also to say this. So
yeah.
it all depends on whether you want to have international investors or Indian investors. Generally, the idea behind listing in the IFSC will give you more visibility, and you will also be able to raise money in foreign currency. And this really generally helps people, particularly those in which PE and VC funds have invested. And many companies who are also having their plants and their offices outside. So these are companies who should actually look at listing in GIFT City, because it gives them those advantages, apart from the tax advantages. You want to add anything else, Arjun, as to why you should? Is that light touch regulations? The regulations are here both pre-issue and post-issue are immensely light touch. So these are the things which I
So
can think
very
of. And
briefly, if I can add, so first is, the domestic company, they have two choices. One is, in case they want to raise capital from domestic investors, they can go to NSE and BSE. In case they feel that they are in a business where probably domestic investors may not value their company, and they feel that there are international investors, there are probably some investors who can value them more, they can come to our exchanges. That is one. And the second is as I mentioned about the minimum public shareholding norms. So in case of startups, some of the companies, if they want to do a listing and they want to have a control of the company, they can come here to 10% offering to the public and do a listing. The third is exit to investor. So sometimes it's very difficult to do. If they are finding it difficult to do the IPO in any market, they can come here and provide exit to the investors. These are some of the benefits. And plus, it is also beneficial for those companies who are having plans to expand outside of India. They can raise foreign capital, keep foreign capital in IFSC, and use the foreign capital again for their investments outside of India. So this will actually benefit such kind of companies. So they need not convert dollar to INR, INR to dollar every time. So this is actually very, very beneficial.
And also to add one thing, so here the exchanges which are there in the IFSC, they are open for more than 20 hours in a day. So it gives the opportunity for the non-resident investors who are there in the different parts of the world to take the benefits out of the market. Sometimes we have seen in the domestic market that there was something which was happening in the global market, but the people were not able to take the advantage, especially in the domestic market, because the markets were closed at that point of time. Here, because the market will open for 22 hours, 23 hours, so they can take the benefit out of it.
So I think we have given multiple reasons for as to why you should list here instead of domestic. It's all different purposes. It's a horses for courses thing that you should pursue.
So can you just tell me the 22 hours which you have mentioned, what is the timeline? At what time you open and what time you close?
Opening and closing. When does the stock market open? When does it close?
It's a start at 4:30 in the morning and ends at 2:30 in the morning. So there is 2 hours gap, and we work 22 hours.
So I can trade continuously 20 hours anytime, 22 hours?
Yes, sir.
So it means when Indian market close and there is in bad news or good news, I can buy the stock here. Is it possible?
No, I think your question is for dual listed companies.
No. I'm asking because you are available at 22 hours. Okay. Suppose Reliance share is there or any share which is listed at both the places, or I can hedge this, or I can do the
For such companies which are listed in both the markets, we are working with SEBI. So there probably will have to take a call. We have not taken a call. What will the market timings? How will other regulations apply? So that probably will have to work along with SEBI, and then only we can take a view. But for companies which are listed only on IFSC, that can be for 20 hours, 21 hours, 22 hours. There is no problem.
Pradeep, what is the logic of this? Though it is good, but the ecosystem is not like this. So, what is the logic that 22 hours you can trade? Is there any point that you can?
So I think I'm sure Ashok will be able to give a lot more nuanced reply. But from my thought process, it's more about there are different time zones around the world, right? And if you want people from Australia and Europe also to trade, then obviously you need to keep your exchanges open to ensure that people from both sides of the hemisphere are able to take advantage of the products available on your exchanges.
Okay.
That's correct, sir. Because you cannot ask somebody to wake up whole night if you want to trade on my exchange, right? We have to make our exchange trading platform available to them when they are working hours. So we
Okay.
have to cover from Japan to other side of the world.
But what about the broker or the intermediary is registered to your stock exchange? They have to if they are trading, then they have to work 24 hours.
So you are facilitating only Indian brokers, and with the online platforms and all those things available, I think that should not be an issue going forward.
Okay. One question I'm just connecting to this, that clarity we want. There is a listed company in India that can come here. Is it right?
Yeah, it can. But on that, as Arjun said, we are working with SEBI for it. So it will take some time.
Okay. Those companies which are not listed, they can come for two things. One is raise capital without raising capital. So I can do both, or I can do only raise capital is then I can do listing. Suppose I have a company and I don't want to list, because I just give you an example of GXC, which I just showed you the picture. There is no need to raise capital. You just registered yourself and list yourself. So what is our system?
For an Indian company, it will be governed by direct listing scheme rules under FEMA, by rules under MCA and our regulations. So they will be required to offer shares, whether it is raising capital by issuance of new equity shares or offering of existing shareholders where a shareholder is making an exit. That is required. And the concept of direct listing, which normally I think US, their market, they also have, where probably without raising capital also you can do that. That is also possible, but for a foreign company, that we'll have to see how to come out with detailed circular on that.
Okay. So next question, sir. So what specific regulatory advantage and flexibility GIFT City offer to Indian company which they do not be there in traditional listed venue in India or overseas?
I think this is answered already, right? The previous question.
Yeah, that is the same thing. Okay, next. Any example of Indian company that have successfully listed at GIFT City?
Oh, the regulations are only 15 days old. So,
Okay.
But we are getting interest, so
Yeah.
hopefully we'll have a listing very soon.
Okay. Next. What role does the International Financial Service Center play in supporting companies listing at GIFT City, and how streamlined in the process for small companies?
Yeah, first we attend webinars like this.
Okay.
That is the so what I'll try to give some perspective and request the other team members also to add. So the first thing that is important is that we need to do an outreach. First of all, people need to know that there is something called an IFSC. There is a place called GIFT, and here you can also list. So towards that, we are doing a lot of outreach programs. These outreach programs are done through the exchanges on our own, and also through bodies like the AIBI and through other industry bodies. And we have already done a few through. Yes, we will also be trying to do the same through other industry bodies. This is one. Secondly, as far as the process is concerned, you must have seen Arjun's presentation. It cannot get more light touch than this. So whether you're a large company or a small company, disclosures are entirely left to you, except the broad heads, as it is done in a lot of international prospectuses. So whether it is pre-issue or post-issue, the disclosures are very light touch. We have also ensured many international practices like this lock-in or lock-up or whatever as you call it. You can even keep the offer open only for 1 day, and the minimum dilution is only 10%, so you can retain control over it. So I think every single feature of the new listing regulations at the IFSC is an advantage, as I see it. Anything else?
Just to add, sir, I mean, the role of the regulator is to basically facilitate capital raising by issuers in a fair and transparent manner. So that is something basically we follow. So as long as you make all the disclosures which are required to be made, and the rules of the game should be very clear, transparent, and those disclosures they can make. We have taken a balanced approach, provide flexibility to the issuers, provide investor protection, but at the same time, do not burden them with compliances which are not required. So that is something which we have followed in our regulation.
Okay. Okay. So
Sir,
any
just to add,
yeah. Yeah, sure.
what Investor Week is coming. We have lined up a series of outreaching programs to create awareness about the gift, what gift IFSC is, what direct listing is, what are the opportunities that we are spreading through this webinar. So that we are working very extensively on creating awareness about this and spreading word about the benefits that are coming.
Okay. Okay. Next is, though it is a premature question, because you are starting, Shivam, next question. Would there be sufficient liquidity initially? Because it's a starting, so I'm not, I'm just saying it's a premature question. Something which you are starting is a young and it takes time to mature. What steps are being taken to address concern about liquidity for companies listed at GIFT City, especially for smaller companies or startup? They may not have a wide investor base. And second, you have MPS is 10% you are prescribing. So both the things are less spread in the market. So I remember when Bombay Stock Exchange was not having a liquidity initially, then they started some incentivization scheme and something. So the question is, sufficient liquidity will be there, or if there is not, then how you will create?
This is actually a very good question, and we keep on receiving these questions from the issuer side. So I must tell you, in the last few weeks, my interaction with some of the entities, we have seen interest coming from many brokers who are using technology. So these are fintech companies with having large investor base. So they are connecting investors in UAE, Middle East, some fintech companies, brokers, they are having large investor base in US. So we're seeing so much interest coming from those brokers with large clientele, they are coming. So this will pick up over a period of time. But we are seeing interest coming from the retail investors in the NRI side. Plus, we have so many institutional investors who are participating in the EIF space. So that is one thing which we have seen in the last few weeks. Additionally, we have the option of market makers. In case an issuer wants to appoint a market maker, they can appoint a market maker for say 1 year, 2 year, who will give the quotes, bid and sell quotes, and based on those quotes, they can build the initial liquidity. And over a period of time, the liquidity will build here.
Okay. Okay.
So, in addition, actually, I went through the listing regulations, IFSC listing regulations, but I could not find anywhere minimum number of shareholders that is required for a public issue for IPO. So that again, I think impacts my liquidity concern.
Yeah, you can give it to one person and that person can in turn downsell also.
Okay.
Yeah.
Okay.
So that is how it happens in a lot of international issues. The minimum number of, see, that would actually be an artificial number in an international issue, right? Even if that 500 people can still hold on
I
to
agree. I'll not deny that, right?
Yeah.
I think depending from issuer to issuer. If there's a large issuer where investors are very keen to participate, they will come and subscribe. So that's why we have not kept as a restriction in the law, but it will depend upon the issuer and the investors.
Okay. 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 Next is, For a company that might not have significant international operation, how can listing at GIFT City enhance their visibility and valuation compared to listing on domestic exchange? Like some company has an operation in India only, they are listing here. So people are not aware. So any thought on this?
No, this is exactly to enhance the visibility, right?
So here we are comparing a company which is otherwise unlisted vis-a-vis listed on international exchange. So once they come for listing, or their visibility
Yeah,
will
will increase.
So they will be considered as a listed company, and they will have access to large institutional investors, which may otherwise now not participate through the private capital route.
Okay.
The very idea of listing is to gain visibility, right? So
Okay.
if you want to gain visibility locally, you get onto a local stock exchange. The advantage of the IFSC stock exchanges is that if you look at, for example, already the bonds that have been issued, the investors are all from different parts of the world. So which means that there is an international clientele willing to consider this as a place where they can park their money. So that is the advantage which the issuers will be able to take.
Okay. Next is more than 50% of Indian unicorns domicile abroad. How can GIFT City be positioned as a more attractive destination for those companies to either relocate or list directly, avoiding the need for flipping to foreign jurisdiction? Because
So
today,
there is
yeah.
no compulsion for you to be incorporated in the IFSC to make use of the IFSC ecosystem. So there is no need for you to relocate also. You can list directly from the places of your incorporation. In fact, like Arjun has been saying, the people from whom we have been receiving requests for listing are located abroad. So
Okay.
they are incorporated abroad. We have got requests from Singapore, we have got requests from US. So they will continue to be there. They will only use this place to raise funds. Just like earlier, Indian companies were using the NYSE and the AIM and other places for raising depository receipts, money through depository receipts. They continue to be Indian companies, but they raise money from international jurisdictions by issuing those instruments abroad. So similarly, these entities can be located in that foreign country and they can come and raise it. There's no need for you to flip.
Okay.
If I
Okay.
can add, some of the companies, startups, they have gone outside of India form structure, maybe 7 years back or 10 years back or 12 years back. So that point of time, they thought probably the other jurisdictions would be more attractive for IPO or listing. But now in the last 10 years, if you see the equity capital market, which has grown in India, they see India as a very attractive and a very liquid market. So they want to come back to India and do an IPO and get access to the Indian investors. For such companies, GIFT City is a platform where you can have access from Indian investors as well and foreign investors and raise capital.
The same thing now that the Make My Trip has gone to international and then list operation in India. Now, if this GIFT City is there, they can use it. Yeah, that's right. Okay, what factors should a listed or unlisted company consider when making this decision and the cost involved?
So the first thing is that what are your objects? Who are the people who whether you want people to unlock their value? In a few cases, there will be a venture capitalist or a private equity player who would want to unlock the value of the investment which they have made in the company when it was unlisted. So in such a case, they can sort of take this place into account because they can unlock in foreign currency. That is one thing. Secondly, suppose you have a lot of your operations internationally, right? There are many Indian companies now, the whole world is in one place, is one place, and many companies have plants internationally also. So for such companies, in fact, if you ask me, doing it through the GIFT IFSC is the best bet. So these things maybe you can consider, and essentially, the cost will obviously be lesser because, as I told you, the amount of disclosures on the offer document and the flexibility that we have afforded in terms of listing or lockup, because if you're going to lock up your shares for 3 years as in the domestic, then obviously there will be an increased cost involved for the promoter. Here, that person can always sell immediately. For pre-issue holders, the lock-in is not non-existent. You can do an anchor investor. So all the flexibility that is sort of possible, and you can even close your IPO within one day. So if you want to take advantage of all these factors, then possibly you should consider it. So this is a decision best left to the company, but these are the factors which would sort of work in GIFT's favor.
Okay. Okay, what steps should a listed company take to prepare for direct listing at GIFT City, especially in terms of regulatory compliance and financial disclosure? Shivam, next question.
Yeah, so here, I mean, the first step will be to engage with the investment banker, and the investment banker will do a complete due diligence of the company, and they will and have a clarity on the use of proceeds. I mean, why are you raising capital? What will be the use of proceeds? Once you have clarity on everything, you can start working on the documentation along with the investment banker and prepare for the listing of a document.
Okay.
So we are also, trying to work with SEBI on trying to bring the merchant banking ecosystem here. So that is also something which we are planning to do. Hopefully something should happen very shortly. So in which case there will be more merchant bankers for them to have access to.
Okay, what are the next questions? Specific accounting and accounting standard, IFRS, US GAAP, and Ind AS required for companies planning for list at GIFT City. How do these align with the global practice? The question you have already explained that all these things are applicable, but the company which are making their accounts in India, as per Ind AS, they have to convert in US GAAP.
Oh, no. So here what we have said, since we are a market for Indian issuer as well as foreign issuers. So issuers can come from any part of the world. It can be from Middle East, it can be from UK, Singapore, Hong Kong, anywhere. So what we have said, this is based on the ISO principles also. ISO says the accounting standards which the companies use for disclosures should be of a high quality and internationally accepted. So based on those ISO principles and based on detailed discussion in the standing committee, we thought we'll recognize only some standards which are globally accepted. So we have gone with IFRS, US GAAP, and Ind AS. So you can follow either IFRS or US GAAP or Ind AS. In case you are coming out with any accounting standard of your local country other than these three, then it is a mandatory requirement to reconcile with IFRS.
Okay.
So this is basically to give an comfort to the investors as well, because investors will be from various parts of the world. They may not understand the accounting standard of the local jurisdiction.
Okay. Shivam, next question. You just leave because that's his answer. Next, after that, what kind of support and guidance does GIFT City provide for first-timer company they want to raise funds or get listed? You have given answer. Pradeep has given answer. Just I'm asking, like BSC, NSC, when you are going to SME or the other platform or tech platform, they provide and they connect to the investor. So is something we are doing or we are leaving to the companies to do their own?
So here what we are doing is, since we are a new jurisdiction and this is something which is very important, so we have requested exchanges and we also do a lot of hand holding. So whenever there is a requirement to have discussion with the issuer, with the investor, with the merchant bankers, we regularly engage with them. So if they want any clarification in terms of the requirements of our regulations, we are happy to discuss with them. We connect the exchanges with the merchant bankers. So these are our regulated entities. So that kind of support we provide. Those are not monetary incentive, but this is something which is very, very important to connect all these relevant players and the stakeholders for a successful listing here.
Okay. Next question, President. What post-listing obligations such as reporting to governance requirement that my company would need to follow after listing of GIFT City? Now, Arjun, because we have a more question and Anjali has a question, so we have to give just short answer because we have given detailed one, so we can start rapid round now.
Okay, so this is, as it is a rapid round, so I think largely we have covered in a slide which was there on post obligations. So financial statements on a quarterly basis, shareholding pattern, resignation of directors, material events, price sensitive information, everything they are required to be disclosed. In fact, sustainability reporting we have included and whistleblower mechanism required to be there.
So we are not but sitting in judgment of what exactly is a material event. We have left all those things flexibility to the issuer.
Okay. Next question, for company listed in BSC, NSC, what is process and regulatory consideration for secondary listing at GIFT City?
So we are working with SEBI. So
yes, okay. From a merchant banker perspective, what are the primary difference between direct listing process at GIFT City and traditional IPO process on Indian Stock Exchange?
So if you ask me if I'm a merchant banker, then I'll have lesser work to do. Because I don't need to prepare 1,000
And
page,
more money.
not a 1,000 page prospectus. So the prospectus is because no, but rightly so, because SEBI caters and domestic jurisdiction caters to a different sector. So we should sort of be very kind to that, because the retail investor there is completely different. So it's more of a thick disclosure based, granular disclosure based regime. Whereas here it's an international regime, obviously where the merchant banker leaves in internationally, a lot of things are left to the lawyers, but and it is they are free to disclose what they want to. The problem arises tomorrow when someone says that you're not disclosed something, or you're not abiding by what you have disclosed. So what we have done, however, is that we have said that okay, there are broad heads which you can sort of take into account while disclosing. So, and that is what we have sort of mentioned in this particular place. So as far as the merchant bankers thing is concerned, I think we have given flexibility on who will be the syndicate. You can choose your syndicate, you can choose the RTA, you can choose the brokers. So largely, a lot of these things are extremely flexible from a merchant banker's perspective.
Okay.
So we have not recorded the first statement given by Pradeep. Less work.
Okay. So next question. How can company determine the optimal valuation for direct listing at GIFT City? And what role can chartered accountant merchant banker play in advising to this process? Is there a valuation required, or this is a market based?
So in our regulations, we have given both fixed price and book building. So the methodology we have given flexibility, and it is up to the investment banker and the issuer. So they can have a detailed discussion. They can do road shows. Based on their road shows, they can evaluate what pricing they should do. So those requirements, anyways, regulator doesn't go into pricing. So, but those disclosures are required to be made in the offer document.
You have left out company secretaries there.
No. Okay. So now, Anjali, you have Anjali has a very specific questions relating to the operational part. Anjali, please, your question. Shivam, next.
Yeah, thank you. Okay.
So we request Ashok also to help us answer these rapid fire questions.
Yeah, Ashok, yes.
Yeah.
Anjali.
First of all,
Sure,
sir, I
sir.
would really want to thank the entire panel for giving such a elucidate presentation. I went through the regulations, but I had certain doubts which have become amply clear while going through the presentation contents. Arjun, tell me one thing. In one of the eligibility requirements, there was a condition post-issue market cap of USD 25 million. Both the first two conditions are pre-issue conditions. How to determine this post-issue market cap? Because this is a eligibility, and wherein how to determine my post-issue eligibility, check it.
So this will depend on the pricing which you decide and the number of shares which are there in the company. So unless you are very, very close to $25 million, should not be a problem. So you suppose you are at.
Okay.
I just want to add, Anjali.
Yeah.
So for IPO and domestic, you can dilute less than 25%.
Right.
But there are conditions, right, with related to market cap, 400 crores, 1,600 crores, depending on what percentage you will dilute. Same principle will apply.
Yeah,
Right.
I think as you.
And other
Right.
markets also have very similar requirements. So with this, we have taken from comparison and benchmarking with other jurisdictions.
Okay. Okay. So underwriting mandatory or market maker appointment mandatory? I think Arjun covered in his presentation.
It's optional.
We received the same
Yeah.
query from one investment banker today. So underwriting is optional. In case they want to do, they can do. But it's not a mandatory requirement. Market maker also, it's an optional requirement.
There are two things which are mandatory: payment of fees, filing of offer.
But disclosures should be there.
Yeah.
For underwriting, whatever underwriting arrangements are there, everything has to be disclosed in.
Okay. And even the market makers' names have to be disclosed in the offer document, the way we do in the SME IPOs?
Yeah.
Okay, fine.
Next question.
Shivam, next. And how do we plan to ensure investor protection? That again is a critical aspect of any listing jurisdiction, any listing space.
So Firstly, I mean, investor protection is very wide. So we have various mechanisms to protect investors. So one is in terms of the disclosures in the offer document. Those are initial disclosures. And the second is a list of continuous disclosures which are required to be made by the issuer. And specifically coming to complaint handling. So in fact, we are working on a mechanism to come out with a uniform approach for handling of complaints by all the regulated entities in the IFSC across all the verticals. So banking, capital markets, insurance, pension fund. We have released the consultation paper in this regard. So that consultation deadline was 20th September. So in case there are any comments, please feel free to let us know. And we'll be coming out with a policy in this regard. So complaint handling mechanism for detail.
And do we have a concept of debenture trustee here in
Yeah.
debt listing, the way we have it in SEBI
We
NCS
have
regulations?
this registered with us also.
Okay, fine. And what role as a merchant banker is expected from us when we talk about transparency and regulatory adherence?
The most important role of a merchant banker is to do a thorough due diligence of the company. So that is something very, very essential. And to ensure that all the information which is disclosed in the offer document are true, fair, and accurately representing the position of the company. And the second aspect is ensuring compliance of all the requirements of the regulator and the exchanges.
And yeah.
So IPO and FPO, the same conditions are needed to be followed, same eligibility conditions. That was not coming clear to me when I went through the regulations.
That was only for IPOs. That was not there for FPOs. So the eligibility requirements in terms of the revenue test, that's same eligibility. It's only for IPO. It's not there for FPO.
Yeah, because
It's
if
only for IPO.
already listed, then you can come with any further issue.
Okay, fine, right.
Just to add one more point here, for if it is a foreign company and it wants to do an FPO here, it will be like an IPO here for us.
Okay.
Yeah.
It will be a
The
IPO
secondary
for
listing for the
IFSC.
yeah.
Okay.
So in that way it covers.
So that means if a company which is listed on, say, BSE, NSE, although you have told us that you are in talks with SEBI for that, but a company listed on BSE, NSE, if it wants to get listed on GIFT, so that will be a FPO, that will be considered a FPO?
So it will be an FPO.
Okay.
Yeah, for the company, yes.
Yeah, okay, fine.
In fact, that is what we are working with SEBI on. A further listing of, that's what we even call it. A further
Okay.
listing of by an Indian listed company, listed in India.
So I think my next question pertains to this only, that since we are allowing only NRIs to trade in the GIFT City, so what will be, how will my existing shareholders, even if I'm an unlisted company, I'm a startup, I've given ESOPs to my shareholder, to my employees, how will they be able to trade if I'm not already listed on BSE, NSE as well? How will those shares be traded?
So if we are talking about Indian companies, the direct under FEMA, they do not allow any trading by the residents. So as of now, only non-residents can trade. And if it is a foreign company, then even Indians can trade. It depends on the company. So Indian company, as of now, only non-residents.
Only non-residents. So employees will not be able to, Indian employees will not be able to trade on GIFT.
Residents can only participate in the offer for sale through a proper offering or a kind of whether it is an IPO or an FPO. So they can.
Okay. Shwam, next. This question came to my mind out of my present experience. There are no takeover regulations or PIT regulations in the GIFT. How will we
on the way
takeover bids or insider trading be controlled at GIFT City?
So the
थोड़ा इंतजार कीजिए मैडम.
So the legal architecture here is in terms of the IFSC Act, till the time we come out with our own regulations, SEBI regulations applies here in the similar manner in IFSC. And we are in the process of coming out with our own regulations on takeovers, inside trading, delisting. So those things we are having deliberations in the standing committee. very soon we'll come out with regulations on these.
But there will be,
Okay.
like we say,
Uh-huh.
there will be light touch again. So international practices.
Okay. Okay.
So don't worry about reverse book building.
FUTP.
Shivam, next. One more thing, the term being used is investment bankers. Are SEBI registered merchant bankers the investment bankers? Because this also was not coming clear in the regulations.
Names are different, but the rules are same.
Roles nahi. I'm just wanting to understand who all can be the investment banker. If so, we as merchant bankers, SEBI registered merchant bankers, be the investment bankers for IFSC?
Capital market intermediaries regulations. Under
Okay.
various intermediary things are actually listed. So one of the things is how to become an investment banker here. We call it because internationally a merchant banker is known as an investment banker.
Right.
So you need to become an investment banker here under the CMI regulations. So there are certain requirements which of office space, key managerial personnel, infrastructure, payment of fee, etc. But as I told you, we are also working with SEBI on Indian merchant bankers being allowed here in the IFSC. So recently, as you may have seen, they have already allowed credit rating agencies and ESG rating providers to work here, subject to separate rules and regulations being put in by IFSCA, and they complying with those regulations, stipulations. So similarly here also, Indian merchant bankers will be required to comply with IFSCA's requirements, which are anyway again very light touch and international in nature, but that will happen in some time. But otherwise, you are still welcome to directly come and take license. Already a few people have taken. We have also licensed the banking units here to automatically take licenses. So in case you are a banking unit and you're watching this, so you can, all of you are automatically eligible to become a merchant investment bankers here. You have to only come and pay the fee.
So to act as an IB over there, we need to have a place of establishment in.
IBU is a IFSC banking unit. So those are the banks.
Okay. Okay, banks. Okay, fine.
So, but if you are a merchant banker registered with SEBI, you can come in both the forms, in the form of a branch or a separate entity. So both are permitted.
Okay.
Yeah.
This question came out of NCS regulations, like private placement of debt securities, listing of private placement debt securities is permissible. Do we have any such plan for GIFT City as well, wherein a company, unlisted company, does a private placement of equity and gets listed?
So equity, no. For bonds, we are having private placement of bonds and getting listed on our exchanges. In fact, $60 billion, most of them are private. All of them are private placement only. For equity, you have to do first a public offer and IPO for getting it listed.
Okay.
Next, Shivam.
Now this would be too premature. I think I would want to delete this question.
Okay.
Delisting procedure, abhi to beginning hai.
Okay, Shiv, Anjali, Pradeep, I have various questions from public also. Some
I think, yeah, my questions are done.
Yeah. So how the market debt instrument to be launched in IFSA, whether a gift territory or overseas?
No, sorry, I didn't get the question.
How to market debt instrument to be launched in gift city, whether in gift territory or overseas?
No, so the investors are overseas, obviously. So you will have to market them overseas, but there are also funds who are already registered with us. So you can market them to the funds also. So both are possible.
Okay. Why Indian rupee is not allowed while 15 other currencies are allowed?
This is as per Act only, because this is separate jurisdiction only for international financial services.
Yeah.
So it is as per IFSC Act, INR is not permitted. It's only foreign currency. And then we have specified which foreign currencies we can permit.
So, and we are also not set up to compete with India. We are set up to be complementary to India.
Okay. Okay. That's a main object. Okay. How a retailer can participate in the instrument and trading with the international stock exchange at GIFT? We need to popularize this in the print and electronic media. That question you have already given answer. Do we still require to comply with SEBI or listed security that are proposed to be listed in IFSCA?
No, for years, no SEBI. Only for dual listing, it will be regulated by SEBI and IFSC.
If you are already listed with SEBI, if you
Okay.
are listed and you're an Indian company, then only IFSCA regulations will
This
apply.
ecosystem, only IFSC is regulated.
Okay. So if you're listed both the places, then you require SEBI. Okay.
It is dual regulation.
What will be the role of RTA in direct listing?
Registrar. So it's essentially it will be the same. As you need to sort of collect the book and you have to ensure that it is allotment and distribution happens. So that is something which we have left to the merchant banker to sort of arrange with the syndicate.
Okay. Just this is a separate question, not connected to direct. How many companies, domestic and foreign, have been listed in INX?
The bonds, there are several listings.
Yeah.
So equity is just beginning. So bonds,
So almost 100+ issues of bonds have been made.
more than 140.
140, 150, yeah, 150
Number of
issues.
All these bonds are issued by Indian companies. What about foreign companies?
So we are having listing of
Foreign
ADB,
companies,
IFSC.
ADB is there, foreign companies are there.
Multilateral
Multilateral
institutions.
institutions are there, and we are getting interest from a lot of other foreign companies also. Once this will become, it's more of a complementary thing, right? So this rubs on that and that will rub on this.
Okay. Shubham, that question is for you. What are the taxation benefit, regulatory benefit, compliance benefit, and benefit related to cost of listing if the unlisted company entry go for listing in IFSC as compared to listing in domestic exchange? So other question they have given, tax benefit you have given slightly, but now you just explain again.
So basically, with respect to the tax benefits, as I told earlier, for the non-residents, there are various tax advantages. So if the securities are listed on the recognized stock exchange in IFSC, then there is no capital gains tax. There is no STT as well. So STT is not there for the residents as well as the non-residents, but capital gains tax exemption is available only for the non-residents. So in terms of if you are having a shop in the GIFT IFSC, this is something which I am telling in addition to the listing. If you have set up a shop in the IFSC, then you are having a 10-year tax holiday under Section 80 LA of Income Tax Act. So in the beginning, in the 10 out of 15 years, you can claim the tax holiday on your business income.
Okay.
So with respect to your compliance and all those things, I think the questions have been answered with respect to
That's an answer. If the startup listed in
Sir,
GIFT,
sir.
yeah, sure.
So I was saying from the compliance side of thing, I just wanted to add the LODR regulations we all know, but the LODR part of IFSCA regulation is smaller. The entire LODR regulation is smaller than only CG provisions of SEBI LODR regulations.
Okay.
So that is the something kind of thing that is there.
Okay. If the startup listed in GIFT City for equity shares in USD currency, like compliance will applicable for ADR, NYSE listed companies?
No, in fact, ADR and in case you did do an ADR in NYC, the compliance are even more stiff. Yeah, and both are anyway unrelated. So this will be, you will be only required to follow IFSCA's stipulations of pre-issue and post-issue, and the requirement is extremely light touch.
Okay. Are masala bond, Indian rupee dominated bond permitted in IFCA?
Already 10 issues of masala bonds have been made.
Okay, Indian rupees.
Yeah, denominated.
Okay. After listing, the particular company will cross $1 billion market cap. The liable to migrate in concerned country's stock exchange or India's NSE main board? I think that's a two different thing. Okay.
Presently, though, no such requirement.
Yeah. This is Ashok, this is the same thing. You have a SME IPO. And SME IPO 3 years, it cannot migrate from BS main board. Okay. And sometime what is happening, my capital reached to 25 crore and I want to raise further capital because my business is going up. But you have a restriction. So the question is, that company which want to raise before 3 years more than 25 CR, can they list here in GIFT City?
No. So I assume that the company is not listed in India, right?
No, that is listed in. But tomorrow you are saying that you are making rules for future. Yeah. So that way, because there is a preemptive question has come to you.
Okay. So what I'm trying to understand is like this. You are a 25 crore company, and if you want to move to the main board 3 years, and then you have to follow certain criteria. But here, I think so. We are still working with SEBI on what will be the optimum market capitalization in case you have to come here. So that is something which we have not specified as of now. The requirement presently is on direct listing. So then
Okay.
maybe that is something which we will have to look at, because that capitalization of 25 crore will be less in terms of dollars. So then
Okay.
we have to sort of understand as to whether we are okay with that also. So that is something which,
Absolutely right.
but that's
Can a
for
Yeah. Can a foreign asset based AIF say HO in USA wanting to raise fund from Indian resident HNI domicile in India, establish an office and operate from Gift City?
No, but they do it, no? Many funds are outbound, they're here only, yes.
Okay.
And
Okay.
India.
Whether all industries are eligible to get listed on IFSC stock exchange?
They are industry agnostic.
So there's no problem. Can Indian individual invest in that question you have given answer? In the domestic exchange also, FII, FPI are investing, right? Then how IFCI is different from domestic exchange?
But
Here they will be able to invest in US dollars. So there the currency risk will be with the FPIs and FIIs. Here they will get the advantage of the currency, also the tax benefits and the longer trading hours, which I had spoken about.
That's a very important point. Which is,
This is an important question. So not just for listing context, but otherwise also, as ED sir mentioned, we are not competing with India. We are complementing. So there are FPI money which is already coming, but can we have new class of investors who are otherwise not investing in India? By giving a light touch regime, by giving the requirements which they want. We want to attract new class of foreign investors who are otherwise not investing into India. Can they come through FPI, through AIF route, or through direct listing, or through bond listing, get more and more capital into India?
So the unofficial tagline of IFSC is onshore the offshore. So not onshore the onshore.
Okay, good. Which definition should be referred for promoter group to assess the eligibility criteria? There is no reference in IND or listing regulation.
No, yeah.
Promoters, sir, it's coming from the rules of the government, so we have not defined.
So we actually, as is an international, space, we have defined promoter for Indian companies under the Companies Act. Whereas as far as international companies are concerned, we're using the term controlling shareholder.
Okay. So because in India also this is going on, this particular aspects for that in place of definition of promoter, we are making shareholding and other thing. They want to do away and bring out the control system that is at par with international.
And listing rules also have.
That was a discussion from few years back that has happened, but then it was not taken forward. The controlling shareholders thing being brought into Indian domestic market.
Because Ashok, what is happening? The definition of founder and promoter, it is now disputing, and this is coming. Every company is saying we are not promoter, and they are designating themselves as a founder, and then they are saying we are public. So that issue is coming. So that's why government has to come out fast about this concept of promoter, the new way of concept of promoter by controlling. That is as it is popular in India, international jurisdiction.
So here what we have said, the concept of promoter and promoters will apply only for Indian companies. If it's a foreign company doing an IPO, the concept of controlling shareholder is there, because most of the jurisdictions, they have the concept of controlling shareholder. That way we have.
So one is we are talking about the Indian prospect, the direct listing, but international companies are also approaching to you.
Yeah. So foreign companies mainly set up by Indian promoters. There are many international companies by Indian promoters, by Indian IITians. Many startups they have set up there. So they want to come back to India. So those foreign companies are approaching us.
Any cap on maximum amount that can be raised in Gift City?
Maximum? No, maximum. So
the more the merrier.
Okay. Is there any bidding platform for investor online or offline?
The exchanges. Both the exchanges.
Okay. RTS
We're providing our bidding platform similarly.
Yeah, sure. Yeah, please.
We will be providing our bidding platform, akin to BSE bidding platform kind of thing, because book building is compulsory, right? So.
Okay. RTA is mandatory or optional for direct listing?
We have not mandated, because here we have said 100% demat. So in case they want to have an RTA, they can have the Indian RTA, or in case they want, that is also fine.
You have left it to the merchant banker to decide.
But that RTA which is registered in India should be registered with you also, or it can work out.
Two separate registration, because Indian company, they will have a RTA in India, so they can use that for their activities, but there is no separate mandatory requirement for having a separate RTA in GIFT City.
Okay.
But
If
so RTA would be required because ASPA payment would be there.
Here we're not having ASPA, so
Actually, you're not having ASPA. Okay, okay.
uh,
Fine.
if any bilateral agreement signed by
No,
IFSC and a US SEC authority,
sorry.
any bilateral agreement signed by your GIFT City and the SEC, US.
Yeah, so we are a member of IFSC, which is the Association of Securities Market across the world. So there are more than 120, 130 members. So in fact, when we became the regulator on October 1st, 2020, December only, within 2 months, we became an associate member of IFSC. And in the last 4 years, we have signed the IFSC multilateral MOU, and they're having an IFSC enhanced MOU. So both the MOUs we have signed. So we can share information with more than 129 regulators, 130 regulators across the world for any enforcement or any information we want.
Okay. SEBI, this can green bond be issued in IFSC by entity other than financial services?
Yeah, by any issue.
Any company can issue. In fact, already since 60, like I think Arjun would have pointed out in his presentation, almost $60 billion of green bonds have already been, $13 billion of green bonds have already been issued.
Okay. SEBI overruling authority or IFCA ruling authority? I think you are separate jurisdiction, they are separate. Okay. Credit rating is mandatory for a smaller amount also. Which credit rating we should opt for?
So this is something which is coming into effect from October 1st. So any bond listing, credit rating, we have made it mandatory. So they can choose credit rating agency registered with us or any global credit rating agency. But we want to build the ecosystem for CRAs here only. In fact, next year we are having a big launch of a credit rating agency here. So what we have said, after April 1st, 2025, if you are doing a bond listing, you have to mandatorily take one credit rating agency registered with us, and additionally you can take the global CRAs.
Okay. Okay. So friends, there are 65 questions we have discussed, and you have given all answers. Now it's a time we have overshooting the time because 6 o'clock we have crossed the time. It was a very interactive session, very interesting. As a ritual, what we are doing, that we are asking all the panelists their last comments on about the topic and about the future. Before this, I just request Pradeep to, when you conclude your point of view, you must advise professional like chartered accountant, company secretary, merchant banker, lawyer, and the Indian companies that what they should take advantage of this particular things. It is different. Everybody is understanding from the trading aspect. That's why various questions are coming. People are understanding on the monetary aspects or the trading aspects, but you have a larger interest as compared to this. You are working out on a bigger issue which can create a position of Indian market, Indian entrepreneur, and Indian professionals, as well as India itself. So I will just start with Shubham. Your last 30-second related to this.
So yeah, basically, like you said, the opportunities for the professionals and the other things. So yeah, the direct listing is one of the things which we have been able to explain in these 2 hours. In additionally, I think Arjun sir had told in the initial slides, like there have been a number of opportunities. There is a full-fledged fintech ecosystem. Aircraft leasing is one of the things which we are regulating here. So in terms of professionalism and I was seeing some of the questions where the people were asking about the opportunities for the chartered accountants in terms of job and something. So I think this is a new market which is giving a lot of opportunities. People are still unaware of the GIFT and the regulations which are there, the status of GIFT IFSC in the FEMA, in the Income Tax Act, in the Companies Act. So all those things are there. So I think we have tried to simplify a lot of things, but still there is a scope. There are a bit complexities which do provide a role for all the kind of professionals. And also we are providing the framework for the ancillary services and BATF. That is bookkeeping, accounting, taxation, and financial crime. So we are giving the opportunities to these kind of professional firms to set up the shop in IFSC, and we are also regulating them and giving the tax advantage of this 10 out of 15 years, which is, I think, the tagline for all the advantages for this GIFT IFSC.
Okay. Akash.
Sir, I'm not a professional as in a technical sense. I'm an engineer by background.
So that's more important.
Yeah, so what I can say is that as a professionals, we all go through learning the history. Like since the early 90s, Indian companies wanted to raise capital from the outside India, but they're only allowed to raise via deposit receipts and all. So this is a unique opportunity where Indian companies are for the first time allowed to raise capital outside India via equity listing. So the history is being made, the more the textbook being written. At the same time, there's an opportunity for everyone to. We are also learning while doing it. It's a huge learning opportunity for us, and we believe the same for all the professionals.
Okay. Pradeep, Ashok.
Am I audible, sir?
Yes.
Sir, I will say that we are there to help any company which are coming and which is having any doubt related to direct listing. The new regulations, like regulators have said, it is light touch, and it is keeping in mind the ease of doing business. For example, we have quickly discussed about the liquidity. At that time, I was not in good network, but just wanted to add up the allocation in IPO. No, we have normally allocation to PIB, HNI, and retail category. There is no that which is defined in the regulations. That discretion
Ashok, we are not able to hear you.
to the
Okay.
US normal.
He's in the train, I can understand. So, Arjun.
So very briefly, I mean, this is an initiative which has been taken by Government of India with the support of all the regulators. So SEBI, RBI, everyone has supported in coming out with a framework for direct listing, and with MC, other ministries involved. Now IFSC has come out with the regulations. So we have brought the regulations in place. The exchanges are ready. So now the time has come for the issuers, for the intermediaries who want to take benefit from direct listing. They can come and list here, and the time is now. There is time for using it and getting the first IPO done very quickly.
Okay, Anjali.
I think GIFT is a very apt name. Gift to the corporates for being able to raise foreign capital, which is the need of the hour. Earlier, as Shubham was saying, that we used to raise foreign capital only by way of depository receipts and other things. But now we can do it sitting in our country itself. So that's a good thing. And as far as professionals are concerned, it's a gift for them as well in terms of job opportunities and better options available. We soon will be one of the highest earners in terms of capital market.
So last, Pradeep, your last word.
So see, the average Indian loves India a lot. Okay, but he or she always wants a piece of the international space. They love going abroad, being there. So for the first time, the government has actually been able to merge both, right, and give you a situation where you can be here, but you can also get a taste of international practices. So this has been a very exciting experiment. It has worked so far. The past 3.5, 4 years, if you look at the amount of progress that the IFSC has made, and the IFSC has been a partner, we have actually made giant strides. This is the first time, as far as companies are concerned, a very exciting opportunity awaits. So I can say that we have ensured that all the international practices, even the best of international practices, have all been collated in one place. Now it is for companies, Indian and foreign, to take advantage of this place, and we welcome you all to be part of this nation building effort. And while the nation is also built, you can also build your companies. So this is what I can say. We are young, exciting, and we have laid out a platform. And I hope this becomes it's a success for everyone.
So thank you. Yeah.
I'm also going to expect corporate professionals to take an investment banking license soon.
Yeah, we will definitely.
I have noted it down.
We will definitely and immediately do. So friends, it's a time. Sure. Yeah.
I'm saying as much international it is.
There's network issue.
Okay, no
Actually,
problem.
a customer.
Okay, so friends, it's a time to close this session. As you are aware that today we have a 3A will supported by P, and then supported by S, because Pradeep is managed by three A's: Ashok, Akash, and Arjun. Okay, so and then we have a Shivam Goel, and then I have missed out Anjali, that is also fourth A. But I remember, no doubt, this is a Herculean task when you start something. I remember and I recall when the NSC came into picture, when the IBI came in picture, when Mr. Sahu was there. So Pradeep has to do the same role, which the Gift City has to popularize. And no doubt, when you are making some strong foundation, then the organization build up. And I'm sure that the way Pradeep has passion and knowledge and expertise, and Ashok from the Bombay Stock Exchange, he's also one of the very finest professional, knowing subject very well. And I heard Arjun first time. You are also very strong in this, and Shivam is taxation side and Akash engineering side. It all will give a new boost to this particular concept, and I am hopeful that this concept will bring laurels to India, laurels to capital market, and some new things will come. No doubt, teething problems are always there when you are starting. You should not compare with BSc or NSC after 30 years with the newborn baby. And this is a young baby, so which is slowly grow up and learn things. No doubt, there is an understanding gap also. Sometimes you compare with the market, what is matured, and the purpose of that market. Here, they are bringing out some different connotation to that particular thing. I hope that this market will come out very well, and it will bring new understanding to the world and bring more and more investment in India. Professional will come slowly. They are joining. And I told you the concept when 2012, when we organized this program, everybody was thinking how to do this, what are the issue, and same question people were asking the same time, which today also we have. I hope this organization will grow, and faster it will bring everybody some fruits, and especially to the country. With this thing, I want to end this program here. But before that, I just want to make an announcement. Our next webinar on 4th October, that is 192nd webinar, that is an SME IPO, from pre-IPO preparation to listing, because SME is now going to popularize. We want to bring out the right path for promoters and the companies, that how they can bring the fruits to go ahead in the right place. And absolutely, market is good. You have a good company, bring out and take advantage of this. And after that, 11th is a Shivratri, so we will, that is a off. Then we have a 18th October, we have a 193 webinar on cyber security and cyber resilience framework for SEBI regulated entities. That is very important for all broker, merchant banker, intermediaries, those who should understand. And the SEBI's team is participating in this, and we will do this. So continuously, our journey of knowledge sharing is going on, and it will continue. And I will request Pradeep and his team, whenever you want that after 1 month or 2 months, that some new things is required, some more education is required to the market, we are ready and we are here to help. So something we are gaining, and in a way of CSR, we are returning to the society, professional, corporate, and everybody. With this thing, thank you very much. Thank you all.